Join us now with his take on the markets and the potential selection of Kevin Warsh as the next Fed chief. David Bahnsen, Chief Investment Officer of the Bahnsen Group. Why did you, and welcome, it's good to see you on set. Why are you such a fan of Warsh, and why are you hoping that it's him?
He was a realistic candidate compared to a lot of the others. I knew he was in the running. He has the respect and credibility of financial markets. I worked with him at Morgan Stanley, thought very highly of him. Look, there was no person who was going to get this job who wasn't going to be cutting rates in the short term. However, I think just longer term, I believe he will be a credible candidate, and his opposition to QE in the early days of Bernanke put him on a little different place as far as his intellectual position. I think that Warsh has credibility.
And Becky, I don't know if you've seen all the sort of I'm not going to call it a cabal, and I'm not going to say Scott Bessent is the adult in the room, but the whole Bessent, Druckenmiller, Warsh triumvirate is maybe we should have never been that surprised that, but he, Treasury Secretary holds a lot of sway with the president, and that could explain why.
But it was not.
The president's not dragged kicking and screaming.
Not at all. This was he was somebody who the president liked in his first term.
Almost did it the first time.
Came into the,
so it all sort of came. But there were times when Warsh, his Kalshi numbers dropped into the teens. I mean, as the horse race.
The president kind of likes the horse race.
Yeah.
And by the way, also doesn't want.
Wasn't
to say
there a time when you thought? I mean, and Kevin's a friend of the show as well, and. Weren't there times when you thought it was much less likely? I thought there were times when he was a dark horse.
But
and then it was
the race and the horse race was all part of the fun.
David, the other summarizing, January doesn't mean squat for you in terms of the markets. How it does in January, you think that's overrated as an indicator, but you do have major concerns about not maybe the overall market, but AI. Tech stocks.
Yeah, well, that becomes the overall market at these market weightings. When 40% of S&P is about 10 companies, then it becomes the overall market. You know what I think you're seeing this week in spades? When you have that kind of response with Meta and that kind of response to Microsoft on the same day, the whole Mag 7 thing is done. And it's one thing if one is up 1 or 2% and another's down 1 or 2. Up 10 and down 10% in the same day. Looks like Apple's going to open down this morning. I think that big tech trade is a total dispersion of results that is going to be very, very different.
The market cap of those 7 stocks is still pretty unbelievable.
As
they go, they're going to drag the market any direction that any of them move.
I totally agree, and I think that the rotation is going to be the big story, because I think that much like 2000, there is a good argument for certain things in the market to not have to be dragged down. They're not at 25 times, let alone 40 times. That segment is just so price sensitive because of the high valuations. And the Microsoft thing yesterday was stunning.
Yeah.
So that said, momentum can carry things a lot further than fundamentals normally would. So you're not saying that this isn't going to be a winning trade.
I am too humble to say that momentum has reversed, but momentum carrying it one way can go further than fundamentals, but momentum can also go the other way. And that is the issue, that a lot of people that own NVIDIA, currently own Microsoft and so forth, they've never seen it. They've never been part of it. Even 2022 is ancient history for a lot of current investors. And so just a year like 22, I think, would be very unsettling for a lot of people. And I think there's a good chance of that. But when you're at 5 trillion, 4 trillion market caps, you could drop 20% very easily, still be $3.5 trillion companies. So I think it's a vulnerable part of the market.
And what is dictating the near-term future for AI? Things that these incestuous relations, because it's great when one $3 trillion company, says, "Well, I'm going to help this $4 trillion company." Yeah. You start wondering about.
You and I could do a lot of business together that way, just paying each other to do business with each other. The problem is that can't catalyze what I'm talking about anymore because everyone's talking about it. A year ago, I thought I was brilliant for pointing this stuff out, but by November, it's now kind of baked in. There is some question. Anthropic announces a deal with so-and-so, and markets don't respond anymore. So what could catalyze some weakness? I think it's people reducing orders. just any kind of indication we're not going to put the same CapEx forward we were. Now, Meta didn't
But
say that.
I was going to say, that's not what we heard so
Meta
far.
went the other way. But then I did see announcements yesterday of big spending plans to Amazon, and the market didn't respond.
We had Corning CEO Wendell Weeks on this week, and they had the big deal that they announced with Meta, too.
Yeah.
That didn't feel like a circular deal to me. That felt like Corning trying to protect itself from winding up in the position it wound up in with communication services back in 99, 2000, where they said, okay, you want all of our fiber optics. We can definitely meet that demand. We're going to have to increase our employee base by 15 to 20% in some of these factories. We're going to have to build out the factory, and we want you to kind of guarantee that revenue before we do that.
That's not a circular deal. That's a company with cash paying a company for a product.
Yes.
It's when the LLMs are involved that they're going to be the end recipient, and they're the ones paying for the order but getting an equity contribution from one of the people in that.
No, just
value
pointing out
chain.
that some of these deals further down the line don't feel the same. They feel different, and they feel like real deals.
Yes.
And that what you're talking about broadening out. The shares of Corning were up 15%.
But it's still a pick and shovel deal, though. Like, it's still about making the infrastructure of AI. And I still think at some point someone has to tell me, how do the hyperscalers get an ROI on the CapEx? And I'm not saying they won't, but my own theory, having gone through all the .com stuff we went through, is I think there will be huge winners, but that nobody can actually tell you how it will play out right now, because it will change. The revenue model will change. The business models will change. And I think there's going to be losers. Yeah. And it's priced as if everybody's going to win.
And then Amazon, $50 billion to OpenAI. I guess maybe some of the money they're saving from the 16,000 layoffs or whatever it is, they can put into OpenAI to help OpenAI go public faster than Anthropic. So there's a race now to IPO.
That's what they're saying.
And then, the op-ed today about the only two entities that can really harness AI if something starts going amiss are China and the United States. I mean, this is a burgeoning technology that could end up killing us all if we're not careful.
On that note,
I'm gonna be careful.
Yeah, there's nothing you can do.
Dario Modi's essay that he put out this week on just that. It's
it is. It is. The cat's out of the stable, or whatever. The toothpaste is out of the Humpty Dumpty's wall. David, thank you.
Thanks, man.